All right, Brian Hoops is with Midwest Market Solutions. Brian, I mentioned that flash sale, and this is another one of those strange ones, right?
It's strange how it's worded. Good morning, Tony. Yeah, 227,000 beans received and then resold during this reporting period. So it's not real clear about anything, but it does appear that we imported the beans in the country and then turned around and exported them once again. And this was to an unknown destination. And a lot of times the unknown destination becomes very important, and such as our weekly export sales this morning. Our sales were not outstanding by any means. Corn was only 37.3 million bushels, soybeans 43 million. But out of that 43 million, China bought almost 26 million, including about 15 million that was switched from that unknown destination over to China. And then the wheat sales, not great as well at 10.7 million bushels. So, you look at these exports pretty much as expected, not really going to give us much of any direction, although beans did rally after the report's release into the closing bell. So we had the private sale that could give us a little bit of support here this morning, but one of the things I think the real talking point overnight is the spending bill pretty much dead on arrival. It's not going to pass. We're likely going to see some sort of a government shutdown at the end of the year, which could impact our January 10th reports from the government. That's one of our major reports where we get planted wheat acre intentions. We have our final production numbers for corn and soybeans, ending stocks updated, as well as world numbers. That's potential implication. And one of the reasons why soybean oil was down so hard yesterday was there was no mention of an extension of the biofuel blenders credit. But we're seeing bean oil rally overnight about 1.7% so far, as that is back in play now as we're looking for a new spending package. So a lot of moving pieces here. Not all of it is related to here in the grains. Some of it's related to politics and what's happening in Washington, D.C. But one other thing I want to point out, the U.S. dollar index rallied to the highest level since November of 22 yesterday after the FOMC meeting, where the Fed lowered interest rates a quarter point, but indicated we may only see 2 rate cuts in 2025, not the 3 or 4 they were anticipating. And that rallied the dollar to, as I said, over 2-year highs.
Yeah, good points there, Brian. Hang on. We'll take a break, come back, talk livestock futures. Market day report continues after this. We do get a cattle on feed report. That comes out tomorrow at 2 o'clock Central Time. And again, that will be the final big report from USDA this year. Let's go to the live cattle market in Chicago, where we traded yesterday in the red, down 95 at 191.30. February 142 lower, 188.32 for the feeders. Yesterday it was lower as well, front month at 257 even, down 47. 90 lower on the March at 257.37. And then for the hog trade, we saw a $0.50 gain in February at 83.70, with the June and July contracts hanging above $100. Let's go back to Brian Hoops, Midwest Market Solutions. What are you watching in the proteins?
So, yeah, the export numbers that were out, pretty routine for both beef and pork. Beef sales, 11.0 million tons for this 2024. When you look at 25, there was another 5.4, shipments of 15.1. So certainly where we've been at here recently, no major changes or anything there. But it is encouraging at these higher price levels that we've been at, that we're still seeing sales to foreign countries. We did not see a big dip in our sales there. Pork sales similar, 22.5 for this year, 4.6 for 25. Shipments at 33.8. We're up near some weekly resistance. We're kind of bouncing around in here, but yet the countries are still buying our products. So that is encouraging, and we'll see if that can translate into stronger cash bids out in the country. Really haven't seen any cash cattle trade. I would expect maybe tomorrow we'll start to see some around that cattle on feed report time, but just haven't seen much movement. Packer margins still moving in the red as cutout values are not rallying at all. They were down again yesterday, putting margins about $69 in the red for the Packers.
All right, Brian, thanks for stopping by. We'll see you back here tomorrow. Brian Hoops is with Midwest Market Solutions. Brian Hoops is with Midwest Market Solutions. Brian, I failed to mention, but I know you will, a flash sale for corn.
Good morning, Tony. You're right. We had another one. This time it was a 150,000 metric tons corn to Colombia. So it's the second sale this week to Colombia. We haven't seen China really buy any soybeans, corn, or anything this week. It's been unknown destinations in Colombia, mostly coming in for our sales. But we're glad to see some corn being sold once again, no matter if it's China or what country it is, Mexico, and that's a country that's certainly slowed. We saw prices move higher overnight, and we've been talking probably for a week now that maybe there's some drier weather moving into parts of Argentina. And if the market's going to be concerned about it, it will be the meal market that leads us higher. And there's really no extreme heat forecast to have a lot of crop loss, but we might have some stress because of that forecast for that 10 days of dryness. And we're seeing meal come off of its contract lows. And in the overnight, we rallied back near Monday's highs, so almost erasing all of this week's gains by today's close. So I think we'll watch to see what the meal does. If it continues to move higher, no doubt it'll drag soybeans along with it, and that will be kind of the bullish star word here. Otherwise, you have soybeans contract lows, meal contract lows, wheat contract lows this week. We're all kind of hovering near those levels. Corn is by far and away the most fundamentally supportive market in here. We had a pretty decent rally. We pulled back this week, corrected, bounced off of a 62% correction, and rallied once again. So the corn market's more of a function of basis levels and spreads. And, we saw basis get real tight. Some cash movement took place. Basis backed off a little bit. Now that cash movement's slowing once again, so basis starting to creep higher, and it probably will into the end of the year. Plus, we get into January. If we have a USDA report in January, it could be kind of friendly for corn, or it should be expected to be friendly for corn. That gives us some buying interest going into that report as well.
I like how you threw in if we have reports, because a government shutdown means no reports from USDA. Now, we will get a report from USDA for cattle, and that comes up later today. So hang on. We'll come back and talk cattle on feed with Brian Hoops. Market Day Report continues after this. So cash cattle did develop yesterday. We saw some in the north at 195 to 197, dressed at 305 to 307, but quite a few passing on the bids. So we'll see what happens today. It's a short harvest week next week, so packers won't need as many cattle as they might have needed last week. All right, so how does that set the stage for trading markets today? Let's go to live cattle traded yesterday in the red. 190.35 a hundredweight on the front month, down 95. 186.55 on the February, down $1.77. Over for the feeders yesterday, we saw pressure as well, down 252 on the front month at 254.47. Lost 317 on both the May and August contracts. And then over to hogs. Did hogs fare any better? Not really. February and April in the red. Front month at 83.62 off 7, with May and June contracts gaining, but the June and July remaining above $100. Let's bring back in Brian Hoops, Midwest Market Solutions. So cash cattle developing and a cattle on feed report today. Does that really set the stage for trading for a day and a half next week?
Yeah, we might be in that type of mode, Tony. It was steady at best cash trade, pretty much wrapped up, I think, for the week. Probably not any type of a bearish news on this cash market, considering what the futures have done the last 3 days. In fact, we've been down, I think, 4 days in a row in live cattle futures. So the fact that cash can remain steady with we go, kind of a victory there. I think we're probably going to see some hedge lifting starting to develop today, maybe some positioning ahead of that report. The placement number is what's going to attract the most attention. On-feed supplies should be within a percentage point of either +1, -1 compared to year-ago levels, but the placements should be down. And the question is how much? Will it be 2 or 3%? Will it be closer to 5 to 6% down? that's what I think really what will people be watching at 2 o'clock when that report's released. So we'll probably get some hedge lifting, some positioning to give us a little bit of a bounce going into that report. Now, Monday, we're supposed to have hog and pig report. We're supposed to have cold storage reports. Does the government shut down and we don't get those reports? That's kind of something the trade is going to be kind of watching and maybe doing some positioning as well today. Those reports are supposed to come out at 2 o'clock, so we can trade those on Monday. But then, you get that holiday shortened week as we close early on Tuesday of next week.
All right, Brian, always great to see you. We'll see you back here on Monday, unless, well, the government shut down.
We'll be
Shut
open.
you down. It won't, though.
We won't.
So, yeah, we'll see you
All
back
right.
here Monday. Brian Hoops, Midwest Market Solutions. Brian Hoops is president, Midwest Market Solutions. Brian, we also had flash sales overnight. That's positive, right?
It certainly is. Good morning, Tony, and hope you had a great weekend, as well as everyone else out there. 132,000 corn sold to an unknown destination, 132,000 beans sold to China this morning, so certainly not anything there that we're disappointed about. It's a positive private export sales, and the fact it was to China, I think probably tells us they're still concerned or still has concerns about South American weather and production. Now, it looks really good as far as the forecast goes for Brazil. Argentina is getting a little bit dry, and we've been talking for a couple of weeks now. Watch that soybean meal market. If the market becomes concerned about dryness in Argentina, meal will be the one that takes off and rallies and leads things higher. And look at last week, big outside bullish reversal in meal off of contract lows that we put in early in the week. By the end of the week, we had taken out the previous week's highs and closed stronger. And we gave some strength in the overnight trade because of that, so that technical buying. But we did, by the end of the day or into the night session, did give a little bit of that back in both soybeans and soybean meal. Gave back some of those gains and closed just slightly lower. Rains were better than expected over the weekend in Argentina, but the forecast still a little bit dry. So I don't know that we're going to see any type of a big sell-off in soybeans based off of this forecast. There's still some dry weather ahead of us, but there is no real heat that's going to really curtail yield. So that's the positive thing here, I think. Really not going to see much in the way of damaging to that yield potential. But it's enough here with the holidays, with the volume really diminishing this week. We might see quite a bit of trade activity this morning or even today, but by tomorrow we have a noon close in the grains and the livestock. Would expect things to really quiet down and really slow down in the grains and the livestock going forward here for the rest of the week. You have the Christmas, you have a couple days after that, and then I think a lot of people just want to take more time off, take an extended weekend or extended week here with the Christmas holiday and an excuse going into the weekend, just take a lot of time off.
Yeah, good point there, Brian. Hang on. We'll come back and we'll talk livestock futures and a recap of a cattle on feed report. That's next. Market Day Report continues after this. So a cattle on feed report out over the, well, I say the weekend. It was after the market closed on Friday. So, yeah, for all intents and purposes, it was for the weekend. The on-feed number, 99.7%, placements at 96.3, and I had the marketings at 98.5. What about cash cattle? Well, 191 to 192 in the South. Light trade developed on that. 195 in the North. We saw some 196, 197, and 305 to 308 on the dressed. All right, I think we've got all of that out of the way. How did the market close on Friday before all of this news? December at 191.32, up 97. The deferreds were all $1.50 higher. For the feeders, $1.12 higher. Front month January, 255.60. Again, big gains on the rest of the contracts. And then the hog market, and we get a hog report coming out this afternoon from USDA. February up 230, 85.92. Brian Hoops, Midwest Market Solutions. Brian, were you surprised by anything in that cattle on feed?
I don't think there was really any major surprises. The placement number, there's at least 3 different surveys out there for that placement number. So compared to one of them, I think it was the Reuters number, it came in a little bit above their estimate, but Dow Jones and the Bloomberg numbers, it was below their numbers. But it was a 9-year low. That's what I'm focused on this morning. Is maybe we open a little softer if it's a little bit disappointing to some people this morning. But I'm focused on it's a 9-year low, and that should attract some buying interest in some of those deferred contracts. So February, mostly April, maybe even June should be a benefit of that by the end of the trading session. We kind of conclude the annual reports this afternoon. We have cold storage, we have hog and pig report this afternoon, both at the same time. Then after that, I think a lot of the trade just going to kind of cash in their chips for the year and maybe do some positioning tomorrow morning, then just kind of move on and close the books out. Cash is called steady, maybe a little bit better this week. Packers have holiday short and kill weeks this week and next week. Their margins are really suffering, so we're hoping that the boxes can move higher with these kill weeks being short in the next 2 weeks. It has to prop up those boxes, regain some of those lost margins for those Packers. They're about $70 in the red right now. So we want to restore that so we can see higher cash trade later on in January and into February.
Well, Brian, thanks for popping in today. Merry Christmas, and we'll see you
Thank
soon.
you.
Again, Brian Hoops with Midwest Market Solutions.